Hi everyone, I hope you're doing fine. I recently made a short video explaining about how to use change of character and this Asian liquidity to get those beautiful trades on NAS100. I recently made a short video. You can just check it on my YouTube channel. This is the video that I'm talking about. It was a quick one, but today I just want to look into much more details, just in case you didn't understand this one. But I also recommend you check out this specific video that I'm talking about. Just check this one, and then you can also add more information about what we are going to talk about today. And guys, don't forget to subscribe to my channel. I would really appreciate it. So let's get started. This is Asian liquidity or the Asian range. So I use these indicators. I have two indicators that I always use when I'm trading. So I use this Asian range by Nikon 948. This is the one I use to, it helps me identify the Asian range or Asian session, whatever you're going to call it. And also I use it to check my imbalances. The times when I want to check my imbalances so that I can draw. There's some specific order blocks we draw immediately after an imbalance, because we know that prices comes back to fuel an imbalance, so it always comes to that previous candle before an imbalance. Anyway, I'll show you later on in the video on how to use those kind of order blocks using also this indicator. So for now, let's look at what was happening. This was on Friday. Yeah, this was on Friday. That was yesterday. So this is in the morning. Should be doing this in the morning. I just woke up around 8 and then I just looked at the chart, and then I already know what I need to do, and this is what I expect you guys to be doing each and every morning. Whatever time I wake up at least should be around 8, immediately after the Asian session ends, right? So after the Asian session ends, what I need you guys to be doing is that if price opens up here, right? If price opens up here, what normally happens is that price is going to do something. It's going to continue going further up, right? It's going to continue going further up, and then when it goes further up, look for a change of character, something like that, right? When you get a change of character, that is when you mark your order block, right? And then you would want to sell from that order block, and your target can be you either have two targets. You have to target any order block that you're going to identify, the one that hasn't yet been mitigated in this Asian session, especially the extreme one if possible. Or if you notice that there's an order block, like when you look at these order blocks here, or what you're going to see that we don't really have much of imbalance that was left that hasn't yet been mitigated. So we find that almost every imbalance that was left here has been filled. We had an imbalance there, price came to fill it. So anyway, my point is just look for an area where your target should be just within this area here, right? Especially the extreme one, or anywhere in the middle here. That's where your target should be, right? Or your target should be something like this. If let me do this, sorry about that, let me just delete this and this, right? Also, your target can be something like that. When you get a change of character here, you sell there, right? So price keeps going down. You don't really need to have a specific target sometimes, right? You can just ride the trend as it is going down. Anywhere in the middle where you're going to get something like that, right? Where your high gets taken down, your high in this trend line gets taken out like that to form another change of character to indicate that price might reverse around that area and do something like that again, right? So this is the way you're supposed to get out of the trade. So that means that if we bought somewhere here, if we sold somewhere here with stop loss just above 1 minute order block. By the way, I use this on 1 minute. Right now I'm on 3 minutes, but I just want to see the outlook of the whole trend, right? Because I see this is an uptrend. That means I know that, okay, we are still in an uptrend. That means I know where the market is going, right? So that means if you sold here, your target, you'd ride the market up to there, but you get taken out here. So every time, if you're riding a trend like this, a downtrend like this one, every time it makes a break of structure here, you bring your stop loss there, a trailing stop loss there. So price comes down, does that, makes another break of structure there. So when you have a break of structure there, your stop loss is on the highest point before the break of structure. Just like that, it makes a break of structure, goes like that, makes another break of structure, you move your stop loss to that high until price fails to make a new break of structure down here, then it gets taken out like that. So if you're monitoring this trade, if you get taken out like that and it creates a break of structure, that means your trend has changed. Your bias should also change. That means you mark any possible order block after your change of character, and then you start buying also, right? You start buying also. After it comes to the order block, it creates a new higher high. When it creates a new higher high, you bring your stop loss at break even, right? So that even if it reverses, you won't make any losses, right? So when it makes a third or second high, if you consider this as your as the first, because this is the change of character and that's the break of structure. So basically this is our first higher high, that's the second higher high. So on a second higher high, that is when we bring a stop loss at break even. Then on our third higher high, that is when we trail our stop loss to this lowest point into this uptrend before this break of structure here. So when makes another break of structure like that, you also move your stop loss there, so that in the event that market decides to do that, you only get taken out around this point. You do the same again. You mark your order block, then you start looking for those selling opportunities, because here it has given you a change of character. That means there's a change of trend, right? So let me show you what I'm trying to illustrate here. But I still get the idea. I like doing this on 1 minute time frame. I know sometimes it's a little bit hectic to trade 1 minute time frame, but with more practice, you are going to you will get used. So when I saw this, now we're back to our chart. When I saw this, I looked at my left. After this break of structure, I could see some interesting zones here, but I went to get it. So there was this. I was hoping price would either go there. You see, you would have to mark out all possible order blocks that you are seeing, because you will never know which one is going to work out, right? You will never know which one is going to work out. So we mark all possible. So those are the three that I marked, right? So I deliberately didn't mark this one out, because when we look at what was going on here, before this break of structure, price gave us another break of structure here. Price gave us another break of structure there, and then it went up, and then it broke out that to give us a change of character, right? It gave us a change of character there. So obviously here people are looking to buy, and the last demand before this change of character, the last demand that was in control was this one, right? So was that one, and then it didn't hold, and then we had a flip, right? So we had this flip here. That means the demand failed to hold. That means our last supply that caused this flip where, that's why I now deleted these two. I was looking at this supply end, that supply end also, those supply. This was already below this area where the flip had. So anyway, let me not confuse you with that. Let's concentrate on the zones that I draw on those three zones, right? So now we're expecting price to mitigate any of these three zones, and then after we get that mitigation, we are on 3 minutes time frame. Then we go on 1 minute time frame to look and to look for that change of character we are talking about, right? So at this point we had that mitigation. Only this zone have this mitigation. That means we have to go on 1 minute to look for a change of character after the mitigation. But before we look at that, we also now look at what was happening down here, right? So from the look of things, after price went all the way up, after it made that break of structure to indicate that price was going up, after it made that break of structure, now we have this, we have an order block there, we have an order block that has been left there, and also we have imbalance that has been left here, that we know that price needs to come fill up this imbalance before it can continue going up. As we have a break of structure here, price needs to come down here, fill up this imbalance, then we can see price continue going all the way up. So just for the sake of using the indicator that I was telling you about, so this is the imbalance, right? This is the imbalance, or this is the imbalance, but this is our last imbalance. That's why I was saying that price needs to come down and break and fill this imbalance here before it can continue go back up. So what normally happens that instead of us let me just do that. So instead of us waiting for price or leaving buy limits here, instead of us just leaving buy limits there, because I see most traders do this, you just have to cover up your wick. You can put your stop loss like that. Instead of just leaving your buy limits there, because you've got a break of structure and you've got imbalance here and you've got unmitigated order block here, right? So instead of just leaving your buy limit there, we can still use, or we can capitalize on that movement that is going to come and trigger your buy limit, right? But that is another risky way of trading. So also, instead of leaving your buy limits like that, you would want to wait for price to mitigate this area. After it mitigates that area, you need to get a sign, or at least a break of structure. You need to get a break of structure here before now you can buy into this order block, right? Instead of just buying directly, because at times when price would not give you that change of character here and it just goes all the way down, that means your stop losses are going to be hit a lot of times, right? So now let's go on 1 minute time frame. We look for a change of character, right? So this is the mitigation that we had. We've got that imbalance waiting for us down here. So let's wait for a change of character. So price just say running down. We didn't get a break of a change of character. So we just keep observing. So around that point, you can see again our high was taken out, right? So we can see our high was taken out around that area. We got a break of structure on 1 minute time frame. So we've got second break of structure. So we move that one here. We move it here. We move it here. We don't want to like leave all the break of structure that we've been having. No, we just want to have that last break of structure that causes a change of character, right? So around this point, you can see how price just rallied all the way down because a change of character. Let's see, there we had a change of character there. So after we have a change of character, now we mark our last order block on 1 minute time frame. So we can just label this as 1 minute time frame. So now this is the area where one would start looking to a stop loss just above the area there. And now you have your target. The target is where your imbalance is, where imbalance is in that zone, right? So now we wait price to come and mitigate our trade. So it was there where we got that mitigation. There where we got that mitigation. So that is where we got that mitigation, and then we just have to hold our trade. So, and also around this point, after it gets mitigated there, and you see that this was the lowest point before our mitigation, which would consider this as a break of structure, right? So when you have a break of structure, like that, you move your stop loss at break even. So even if it reverses, you don't have to lose any money. Your money is protected here. You put it at break even, and then you wait, right? You just have to hold your trade. Don't close your trades early. So as we can see there, price almost came close to our TP. Then around that time, price hit our TP, right? So already now, this trade is complete. We had a change of character, we had mitigation there. We targeted that price was coming to fill up our imbalance. If you can go on 3 minutes, where we are seeing this imbalance, right? Where we are seeing this imbalance. We are seeing this imbalance there. We have that. You also have that mitigation in this order block, right? So our TP has been hit. Close profit. This is a trade off 9.8, which is almost to a 10 risk to reward ratio. This 9.8 is risk to reward ratio, which is good profit, right? So also, as I was saying, since we are looking to buy here, right? We can bring back our Asian range. This is now in our Asian range, right? So it came to mitigate this order block that was halfway into our Asian range. So price can still continue going further down, or it can reverse from here after mitigating this order block, right? Now, if we were to go back on 1 minute, so instead of just buying or leaving our buy limits like how I see most people trade, which is still fine, to just leave your buy limit here, you could have been triggered by here, but you don't know whether it's going to reverse here. You only want to enter a trade where you get a confirmation, like how we got a confirmation here, where you get your last break of structure and a change of character. So what is happening here is that we have this break of structure. This is our last break of structure. This is our last break of structure, and That was our last highest point before this break of structure. If this get taken out, then we'll look for entries, for buying entries, right? So around this point, we got our high in this downtrend got taken out. So around this point now, that becomes your change of character. So after this becomes your change of character, now we have to look at where price can possibly come, right? So when we look at this, we have a lot of listing points. So we have that, we have this, we have that. So that times when you have a lot of order blocks, we also have this as our. Now this is where you need to be very careful and choose the right order block. You see, there has to be a story that why should price come to your order block? Why does it need to come to that order block, right? So when we have these 3 order blocks, right, we can also see that these are mitigating each other. If you refine that to that, they're still mitigating each other. It's still fine. So now we don't know which one is going to, where price will do reverse, or which one we are going to buy from, right? So if you can't come up with a story to why price is supposed to only reverse there or here or here, the best way I can advise that put a buy limit here. You put a buy limit here, right? Put a buy limit there. You put another buy limit there, because you don't know which one is going to work. So you put a third buy limit there. So one of these is going to get triggered, and then you're going to recover the. If this one doesn't get, if this one hits stop loss, you recover your money from any of these two, or these two get hit stop loss, you recover your money from that one, right? But let's look at this into more details. If you don't want to do this random way of trading, it works. So when we look at how these candlesticks are, and we bring up our imbalance. Okay, just bring up our imbalance. If we bring up our imbalance right there, if we bring up our imbalance, so we have imbalance all the way up to here, right? So we know that price might come here, but this one will not hold, because price needs to fill up this imbalance here. So we eliminate that one, right? So down here we do not have any imbalances. Price doesn't need to go all the way down there, right? So we also eliminate that one, and we eliminate this one, right? So we only mark the candle next to the imbalance. So we know that price only needs to come and fill up the imbalance, then it goes up, right? So we highlight this candle here, because that's the candle, the previous candle before this imbalance, right? So this is the candle that we highlight. That's the way we are going to buy from, right? So when we buy from here, our stop loss will just be below there. So when we're buying from here, we go back on 3 minutes. We go back on 3 minutes to determine where our target should be, right? So when we go back to our 3 minutes to determine where our target should be. So now our next target, we know that these are going to be taken out. We have this order block that wasn't mitigated, so this becomes our target, right? So this order block here, it's done. It has done its job. Price then need to stop here. It needs to go through all the way through this order block, so that those that want to sell here because they're seeing that price has touched here, those are forming some kind of liquidity, right? So our target is, that is where our target is, right? So we go back to our 1 minute time frame. So after you go back to our 1 minute time frame, right, let's see how price enters our zone. So right here we're in the trade, and we know, see, after you just get mitigated like that, that is your highest point. So if that highest points get taken out, we go break even, right? We go break even. So around that moment, we go break even. So even if price comes back down here to come and take us out, we won't lose any money, because at the end of the day, it's the game of numbers. We all want to make money. It's all about numbers, nothing else. It's all about money. Trading is about money, nothing else. So you have to protect every little cent that you have, so that the numbers can keep increasing. So that the number can keep increasing. At around this moment, we have price comes here and takes out this, makes a break of structure. When price makes a break of structure, that means our stop loss that was here, we move it to this low here. So at least even if price comes and takes us out, we go out with some profits. From here, you just hold, you trade until price just goes to your target. You can just remove this imbalance indicator. We don't need it anymore. So around that point, your target gets hit, right? Your target gets hit. This one, you're getting a risk reward ratio of 25. So if you just placed your buy limit here with your stop loss below your zone here, and you take profit just here where the previous one is, you would get a risky reward ratio of 11. So what this means is that what normally happens is that if here you like risky, saying if on each trade we're risking 200 in terms of money, whether it's 200 USD, 200 rands, whatever, let's just put it as 200, right? If it's 200 the trade you're risking and your reward is 11, say that's 200 times 11. So on this trade you would get 2,200, right? On this trade. Then on this trade, if it's 200 you're still risking and your reward is 25, you'll be making 5,000 on this one based on the risky reward ratio. So this is why also waiting for those kind of confirmation is always important. You get this nice risky reward ratio instead of just placing your trades here, right? So thanks guys again once more. Don't forget to watch this video where I was explaining about market order flow and change of character. So